us and hear us. Back due to popular demand, Patrick Boyle is here. Uh, Let us know if you can hear us, if you can see us. Patrick, how are you?
Great. How are you?
I'm good. I'm good. They told me to bring back Tyson Fury, but with with a financial degree, and much less weight. Everybody was joking around. You look like a Tyson Fury, got a diet and an MBA. For those of you new in the chat, Patrick Boyle runs one of the best finance channels on YouTube. It's called Patrick Boyle Finance. Um, Patrick is also a good friend of mine. We already did one interview together, which he smashed, and everybody was asking for Patrick to come back. Um, we're getting notifications that sound as good, so that's good. Patrick actually came back here, back on popular demand. For those of you who are not familiar with Patrick, Patrick is one of the founding members of a hedge fund. He's an author, a professor at King's College at London, and a really good YouTuber, surprisingly, given all that. And just getting better and better. He's about to hit 100,000 subscribers on YouTube, which is really impressive. Um,
To the moon.
to the moon with no clickbait. I mean, just straight up good, sound financial advice and good storytelling with no clickbait, no penny stocks, none of that shit. So good job, Patrick.
Thanks.
So Patrick, the reason I brought you on, and but you know what? Before we continue, because there's a lot of new people in the chat, as you want to kind of give like I want to give you the floor, to introduce yourself because I kind of I did like an impromptu introduction,
Oh
but
no, that's pretty good. Like if basically my YouTube channel is just it's a finance channel. I guess I try and explain some of the more technical areas of finance that are sometimes slightly misunderstood, and that's kind of the point of it.
so Patrick, I have to ask you a tough question. Is this thing over? Is the GME story winding down?
I think it's a tug of war. I think it's kind of interesting, like obviously if you were long 2 days ago, you've had a bad couple of days. I think it's just what it's around 104 right now. Um, there's a lot of things that sort of feed into this. Like some of it is just will people get disillusioned with the idea? There's some people who possibly bought in at the sort of $300-400 level, hoping it was going to 1,000. And if they've lost, a lot of money, they might just want out at this point. There's also even the technical things relating to the delta hedging of options, the way it sort of pushes it on the way up, it equally pulls it on the way down, like the market makers essentially will have, as the price goes up, they have to buy more stock. As the price falls, they have to sell it. And so there's sort of, it's likely to be quite a volatile, trendy stock for a little while. So.
So the answer is it's not. It's we haven't seen the last of it yet.
Well, I
Uh,
mean, it's trading at about twice Apple's PE ratio at the moment. It's probably not twice as good a stock as Apple, and so we have to expect, eventually it to normalize.
and talking of your British sarcasm, Irvin Chan, who's a channel member, said, "Loved your jokes, Patrick, on the GameStop video." I actually agree. Well, I love how you did it. Like, Wall Street people, they like the Wall Street best people. They like video games, and GameStop sells video games, so they really like video games. You made it so. I mean,
It's funny, that video was quite different to my normal ones just because normally it's a bit more pre-recorded, while that was kind of banged out with a cell phone in about 15 minutes simply because my students at the university said, "Can you explain this to me?" And I said, I'll do it. I'll throw it up on YouTube. And so
those
that
tend to do
was,
better than anything else. Surprisingly, is that your best performing video to date, Patrick?
it's not really, but it probably will be. Like it's a very fresh video. I have other videos that have more views, but they've been up for months. So
Um, so just you mentioned earlier, we saw the short interest numbers, right? So because we were preconditioned to the 140%, now 100 all of a sudden seems to us like it's lower, but it's still insanely high. I like for in my understanding, I know 20% is insanely high. 100% short interest, it's extraordinary, wouldn't you say?
It is. It's extremely unusual. I mean, this sort of thing does happen once in a while. I would think that no one probably wants to be involved in it at this point. Like, I think, if you're short this thing, it's been a nightmare. It also, the problem is that when these things move outside of the realms of sort of common sense, there's no limits on them. You've sort of stepped through the looking glass. And so as to how it works out, like, we can sort of come up with a prediction about where it might be in a year's time. But if because a lot of people have said to me, should I short it now? And it's like, really don't. Like, don't. Things like this, don't get involved in them. And actually, I made a video a while ago on short selling stocks in general, and I usually just advise people to avoid it, simply because it's a risky trade that tends not to do that well. If you look at the long-term returns of short sellers, they tend not to have great returns, and it's simply because markets generally drift upwards, and you're on the wrong side of that. And so I think, unless you have a sort of a genius idea, don't really get involved. Yesterday, I had Victor Hagania on my channel, who was one of the partners
Phenomenal
at
video.
Long-Term
Phenomenal
Capital
video.
Management. Yeah, I mean, he's a super, super interesting guy. And it's kind of interesting because obviously he went from one of the more technical areas of trading, this sort of bond arbitrage, to kind of a long only approach to investing. And essentially, you know, if you look at when he did what he did, like, he was a very young guy in the 1990s. They had the biggest hedge fund in the world, and they were doing a trade that no one had really done before. So, in terms of, a lot of people look at it today and they say, well, didn't they know how to risk manage it? And it's like, that's like sort of saying to the first guy who pushed a boat out into the ocean, like, don't you know how to build a boat properly? It's a different thing. But it's interesting, just on the nature of certain types of trade. You end up taking unusual risks that are not all that understandable, and it takes a long time to work out what risks you're exposed to in certain types of trade. Like, I'll give you an example, like, without getting too boring, is, when you look at options and how they trade based on implied volatility, and we've got the volatility smile. The volatility smile didn't exist until the 1987 crash, right? Like, the vol surface used to be flat, and then people realized that the market could fall more than they thought it could. Over the last few days, we've sort of seen almost the opposite. We've seen an upward crash, right? And so suddenly, over the next few years, you're going to see changes in how options are even traded, because people need to take into account that they can crash upwards as well. So there's tons and tons of lessons in this story. Like, as teaching at a university, I'll be telling this story for a few years, because there's just a lot of interesting stuff.
Um, I couldn't agree more, but I have an epic question for you. As you were speaking, a user by the name of Lebel asked this question, and your humor is going to be right, a good fit for this. What would you and Patrick think happened when Melvin realized what is going on? Panic attacks? Question mark. People puking up in the paper bins? Question mark. I mean, it sounds pretty close to probably what happened when this thing started.
Well, an amusing story was, I worked at a large investment bank in London during the credit crunch, and I don't think it was I think it was when the Jerome Kerviel, trading was
Societe
unwound. I
Generale.
don't know. Yeah, and so
The
basically
future.
this
He's
happened
actually a futures
on
guy like
Martin
you.
Luther King Day. Pardon?
He's a futures guy. He was a futures guy, wasn't he?
He was, yeah, he was supposed to be.
Wait. Can we back up a
And
second, because it's just nerds like you and me know Jerome and Societe. Can you tell the story a little bit, because it's a
well,
fascinating story.
basically, he was a rogue trader within Societe Generale. So he was supposed to be doing one thing. He was supposed to be trading futures against forwards. And really what he did was, he just piled into, I think it was the futures, the Eurostoxx futures. And so he built a position of about 50 billion
50
euros.
billion
At the
euros.
time, yeah,
Billion.
at the time, SocGen had a market cap of 30 billion. So we're talking, almost twice the size of the bank, right? And then I think essentially he called up one day and said, guys, you probably should take a look at that position and I'm not coming in anymore. And so SocGen had to dump that whole position. And they did it on Martin Luther King Day in, I think it was 2007. It was right before the credit crunch. And the market sold off like nothing I've ever seen
Hmm.
before or since. Like it was a shocking,
And
shocking
somehow
day
they
in
survived
markets.
this,
But
though, Patrick. I don't know how they survived this.
well, it's pretty amazing. Actually, interestingly, I met the guy who had to do the unwind about a year later, which was a good story. But when I worked at the bank, there were two options traders, young guys who were maybe, 6 months in the job. And at one point, I think one of them might have even sort of fainted and the other vomited into a bin next to his desk. Like it was that kind of a day,
We've seen. I mean, when I saw this comment, I was like, this is like grotesque, but this is literally like when you. Do you remember that in the US the. Well, I don't want to dox myself. Hold on, I was about to tell a story that I can't say. I'll tell you privately. There was a big issue. We had a lot
Right.
of money inside. Thing that they walked the guy with the handcuffs. The walk of shame, and he had our money. And
Yeah.
so I remember how it went. That day was pretty much like as described. Very, very similar.
Yeah.
Um, so,
Mm.
hold on. So, quick question for you. You and I are not fans of regulation in general. I think we are both very firm believers in free markets, and we share that passion. So, have you had a chance to see what Janet Yellen, the former employee, I don't know if the Janet Yellen, the head of Treasury, said about regulating this and fixing it and her employment
I
history.
actually didn't see that. No,
So let
what
me
did
clue
she
you in.
say?
So there's a bunch of articles circulating. So Janet Yellen, the head of Treasury, the new one, is saying, well, we have to regulate this, et cetera, et cetera. We have to work with the SEC and the Fed. This cannot happen. This basically implying it. They want to shellac the retail traders. Now, in an article in Reuters, they basically said, hey, just FYI, guys, she took $700,000 from Citadel last year in speaking fees. So just so you know, before you kind of. So for me, it was a little bit strange because I don't see a lot of heads of treasury talking about stock market regulation. I mean, that doesn't really, it's not their wheelhouse. You know what I mean?
It's a little surprising. I don't really know what to say about this because there's a lot of, politicians, and then equally, I almost classify some of these people in as politicians, even though that's not exactly what they are. But I imagine that within some of these roles, they are just very concerned about markets remaining orderly. Because if you think about it, we've just sort of had this huge amount of spending in order to keep the economy alive through the pandemic, and there is a risk, of course, that whenever you do this sort of the printing of the money, that people go mad with speculation, right? So if you're in Janet Yellen's seat, you're probably just saying, like, is this going to be an ongoing thing? Like, are we going to have kind of the dot-com boom times 10? And what's interesting is how do they deal with that, because they don't really want to kill the economy by, hiking interest rates or anything like that. And so they are in, there's a delicate balance that these guys are trying to maintain. And I wouldn't really, I don't necessarily think they're out to do any harm. I really think that a lot of these people are just trying to keep it together. And I think that they, to a certain extent, are the type of people, their whole thing is to sort of speak and calm down the markets. Like that's what they want to do. They want to sort of say everything is being monitored. Don't worry, it'll be fine. And that's kind of what we're hearing from a lot of these people. We're not really hearing any harsh regulation or anything like that, at least not yet.
Don't you think, though, Patrick, they're trapped in this hamster wheel? I mean, we're getting a little bit economical here, but okay, so the Fed is printing money to keep the economy alive, right? So the printing of money causing insane inflation and also overvaluation in the markets. They have to keep the interest rate low so that savings go to zero. But when the interest rates are low, the DCFs go crazy. I mean, the valuation
Yeah.
of these companies goes crazy, and by the way, in my DCFs, if you notice in my videos, I use 12% still to this day because I don't want to. I want to stay at 12 or 10
Yeah.
at lowest. But anyways, so and they're chasing their own tail, so to speak. So they're printing money. They have to keep the interest rate lower, but they're causing massive overvaluation and this frenzy in the market because there's so much cash going around. People are out of jobs and sitting around home. So it's almost like it's like a self-feeding cycle of horror. Like, how do they get out of this?
Well, it's a very interesting thing. And, to a certain extent, I'm not a huge fan on like sort of any real management of the economy. Like, I didn't really believe in a lot of the bailouts back in towards the end of the credit crunch and whatever, because I think there's almost a problem with if you calm things down too much, you set up a scenario in which traders, investors, bankers, everyone just thinks they'll be bailed out, and so they don't have to be prudent. And that is sort of a problem, and it's the main criticism of Alan Greenspan was that he sort of wanted to keep everything at a simmer for so long that then people didn't, you then look at Wall Street and say, why did it all go crazy? And it's like, well, these people were conditioned that the market never gets crazy, or if it does, that the Fed steps in. And to a certain extent, I think it's good for people a little shakeup. And not only that, I even think for sensible people, like if you have some savings and you want to invest in the stock market for the long run, is it so bad if it once in a while takes a bit of a dip and you get to buy some cheap stocks? Like it's not the worst thing in the world, and it equally keeps risk front and center, which is in my opinion important.
And there's also when letting things crash, there's also like this almost this efficiency theory, right? When you let things crash, it weeds out the bad companies, the bad managers, and the strong survive, and then they build better and better companies, and then it's like a cycle that has to happen. If you keep bailing out the
Well, it's
idiots,
the whole creative destruction argument, right? That
yeah,
that sort of capitalism is supposed to be built upon that bad companies go bust, and and even I've made a few videos on it, like on the one I did on the dot-com boom, and I point out that this
yeah.
huge bubble existed and then it collapsed, but it left behind all of this infrastructure that then was built out by people who had maybe better business plans. And so actually, it's not so obvious that boom and bust cycles are terrible as long as they don't get like wildly out of control, like we'll say the Mississippi bubble or
Yeah.
something like that.
Let's use a simple argument. Like I'm not a quant guy like you, so for me it's a very simple argument, and I used it in one of my videos. Let's say you have two kids. One is an idiot. Let's call him Melvin. The other one is not an idiot. He's a smart guy. Let's call him Joey. We have Melvin and Joey, right? So Joey saved his money. He's very prudent. He doesn't buy stupid shit, and he ends up with a lot of money. Now Melvin shorts GameStop stock, loses all his money, comes back and says, "Listen, I'm out of money. I need money for college." Both of them have the same parents, and the parents will say, "Well, we can't let Melvin not go to college. I mean, come on. Here you go. Here's $40,000. You, Joey, you already have $40,000, so you don't need $40,000." What kind of a message? What kind of incentive we're sending to the other kid? Basically saying, "Well, you don't need to be a smart kid. You don't have to. You don't have to be efficient. You can just, but spend it on coke and hookers, whatever. I mean, we're going to bail you out anyways."
Yeah.
And that's kind of the message you're sending to the market, basically breeding this whole generation of moron managers that do whatever they want because they know they're going to get bailed out.
Well, it is just problematic, that idea that there's a put there. And actually, that's even a lot of the people, like, I mean, it's not like they don't realize this, because when you look at, we'll say, the way they got rid of proprietary trading at the investment banks, I don't know, about 10 years ago. And at the time, I sort of thought it was a bit ridiculous because proprietary trading didn't actually cause any of the problems. The problems were caused by lending money to people to buy houses and that
Yeah.
sort of thing, and by certain derivatives and so on. But it didn't necessarily make sense to kill proprietary trading, except if the Fed decides that actually these firms are too big to fail, we are going to bail them out if things go wrong. Well, if there's sort of a Fed put, if you're short a put, on these companies, how do you make that put less valuable? Like, how do you make it cost you less? You decrease the volatility, right? So they just took anything crazy out of the banks. Now, of course, what happened then is that it pushed all of that out into the world of hedge funds and other places that are less regulated. But it's sort of, the Federal Reserve are paying attention to these problems, but it's a very difficult problem to solve. And to a certain extent, it's kind of why I don't believe in the kind of huge government idea, is simply that you kind of keep putting band-aids on things and it
Exactly.
doesn't. I almost think you just let it run, see what happens, as long as everyone is a grown-up, they make their decisions based upon that. And if you do something crazy and it doesn't work out for you, well, that's your misfortune.
So we're in agreement, but unfortunately, the regulators can't let this thing fail. There's too much politics involved. I mean, they won't let it crash ever, for obvious reasons. But okay, so here's a question for you. You're a options guy, you're a quant guy, you're a futures guy, and here's a question for you. Looking at the market right now, I'm giving you a set of problems, and I'm looking for an output. So the variables are, if you look at the U.S. economy, it's stagflating. It's stagflating like crazy, meaning for high inflation, high unemployment rate. We have a lot of money in the market. Market cap to GDP shows that the market is as overvalued as it's ever been. So sh- obviously there's going to be a massive pullback. So the question is, maybe, well, I think, but if so, when? I mean, how long can this thing go on?
Well, it's hard to say, because even you look at, like, the question is, what do you put your money in, right? Like, are you going to put it in bonds and earn 0% interest? Not really. It just gets eaten away by inflation. Are you going to put, you can list all the different asset classes. And the truth is, in this environment, it possibly makes sense to be, I think the Fed are probably going to let inflation run a little bit more than they normally would. Like, they basically said that. And I've a friend, Manoj, who I interviewed a while ago on my channel, and he argues that inflation is just going to be significantly higher than people think, and equally that the Fed are going to let it run rather than kill the economy. And so, in a way, I would argue that you probably want to be in assets that will do well in an inflationary environment.
So is that the way to hedge, or basically to mitigate risk? You think bonds, not like precious metals and stuff?
No, like even maybe things like tips, treasury inflation
Yeah.
protection securities, that sort of thing. But it's very difficult to say. The truth as well is that I'm a very short-term trader. Like, my average holding period is sort of a day and a half in futures. So I'm good at telling you what I would do over the next few hours, but it gets, I have as good long-term ideas as anyone else. Like, it's pretty random.
Hold on a second. I'm facing my mic. People are saying too much white noise. Okay. This should be better. Let me know if the white noise is gone. I think we should be fine. So, wait. Let me know if this is better. Everybody says too loud, too loud, too loud. Okay, let me see if this is better. Better. People are saying better. Okay, good. So what happened is that somebody commented in the chat that they can't hear me and yours is too loud. So I increased my gain. Then the whole chat went
Oh,
crazy.
I can take mine down a bit.
No, no,
Hold
no, no, no.
on.
I think it's just somebody was trolling us because they
Oh,
went
I see,
crazy.
I see.
Yeah, I got. You know what? I got alone up. Fool me once. You remember that? Don't the no, no, no. The George Bush one. Fool me
Oh,
once,
yeah,
shame
yeah.
on me. Fool me
You
twice.
won't get
Well,
fooled again.
you're on fool again. So, Patrick, I gotta ask you a question. Before I do, there's an audience member who just donated, and he wants to ask a question. He says, "Remember, Russia and China had increased their gold reserves from '08 to 2,000 tons. Might indicate a loss of confidence in our current monetary system." Oh, I don't know what to tell you about that. I don't really do well cross-border macroeconomics like that. I just don't know. Sorry, Anil.
Yeah,
I don't
I
know.
also, the problem with me is whenever people start talking about gold, I lose interest because it's just, there's no real reason for gold to have any value anyhow, other than as a, I don't fully understand the pricing of gold. Like, it's just really not my expertise.
Okay, so by the way, again, people, I think people are trolling me in the chat now. Some are saying too low, some are saying too high, and I think we're in this trap where they know I'm looking, so they're. Can somebody I trust tell me if the volume is okay? I'll know to find you in the chat. Um, Somebody trustworthy, preferably, let me know. Okay, so, anyways, um, so I'm gonna ask you my next question, and I hope you guys can hear me. So, this question I kind of came prepared with, and tell me what you think. In certain countries, and I've looked it up, they have regulation that limits the extent of short interest in the company. Basically, there's a cap to how much you can short the company in aggregate. And I've seen it kind of go in the ranges of 15 to 20%. I've seen more, I've seen less. But I mean, wouldn't that just solve this entire problem, like in the bud?
Not really. Like the thing is that people are sort of focused in on shorting this awful thing, and it's not. Like, I'll give you an example of shorting being good. Enron, right? Like, if you banned shorting, there would be someone might look at Enron and go, "Yeah, that looks like a fraud, but there's no way of profiting from it, so let's move on," right? Or Wirecard, or all of these problematic companies. So actually, incentivizing some people to do deep research and root out fraud is not so bad, and shorting allows that to happen. Another thing, though, that I think people get very confused about, and I slightly blame Elon Musk for this, is the idea that people think that someone can short a stock and knock it down to zero and then the company goes bankrupt. But of course, a company doesn't go bankrupt because its stock price is at zero. A company goes bankrupt because they can't pay their bills, right? So in the real world, it doesn't happen because, of course, someone will step in and buy the stock for the value play. But a company issues their equity originally to raise capital to start up a company. Then that equity is out in the world and people buy it and sell it. But if you buy it at a high or a low price, that does nothing for the company. Now, often the company executives are then incentivized either to own stock or they're given options or whatever, because shareholders like the idea that the executives have an urge to push the price up. But if that wasn't the case, there's almost, the company has issued the equity. They don't necessarily care. And so the idea that evil shorts can put companies out of business, it's not actually true. Like in truth, like if Apple Computer tomorrow morning was trading at zero, my advice would be to buy it because it's a profitable company and you'll get the cash flows that come from that. But the share price is disconnected in many ways from a company's ability to stay in business or not.
Well, I'm going to push back on that a little bit. Let me give you like, because I've been in the corporate world, and I've not only worked in from that side, I've been through the other side. So let me tell you what happens when there's a drastic change in the share price. It puts, it doesn't affect my balance sheet at all as the CFO or the CEO, doesn't matter,
Yeah.
but it puts the company through a spin cycle of madness. Suddenly you have to reassure the investors, the board, your job. It starts a whole almost like a self-fulfilling prophecy of every, well, why is the share price going down, what's going on? And then the CEO is much more busy with dealing with the share price rather than managing the company, so now he's less efficient, so the whole system goes into this clusterfuck when there's a massive drop in price, even though it shouldn't. I mean, you should say, well, I don't care what the share price is, I already have the money, do with the secondary stock whatever you want. But the stakeholders, they care. That means the management cares. That means it's not exactly to say that it's insulated, because I don't think it is. However, I agree with you.
It's not in, yeah, I mean, obviously that's even why the companies are set up. Like it's even questionable, by the way, how many options a lot of these executives get, because there may be other people will argue that they're too incentivized by the short-term
Hmm.
share price. But
I'm one of them.
the the idea that you can cause, like the idea when people say these hedge funds are out there pushing down prices, you wouldn't, if you think about it, you wouldn't want to push down the price, because if you're pushing down the price, it means that you're selling too aggressively, which is pushing down the price, because it's kind of like shares sold over time is sort of the question. And if you do that, the problem is that then of course you are still short. You have to buy them back, and you'll have to buy them back in a similar way, and you almost kind of cause a dip and a rise in the stock price. And it's not obvious to me that you'd make any money out of that. I mean, there are bigger problems. Like, it is questionable, we'll say, if you start spreading false rumors. But of course, there is lots of regulation against spreading false rumors about a company. So that is, I don't know, I think that there's a lot of sort of villainization of people for doing a thing that, like, firstly, it's a trading strategy I don't recommend, because as I've said, I think it's generally a money loser. But it's not an evil thing. And when people say these guys have been making billions for years doing this, you'll find that they haven't. Like, there are very few short selling funds that have done awfully well over any length of time.
So, first of all, you and me agree and disagree on this, and I'll tell you why. I love Elon Musk, but when he tweeted, "Well, short selling is inherently bad," I don't agree with it, because if I have like a more recent example, like Nate from Hindenburg Research, who brought down Nikola. I
Yeah.
think it was a good thing, and he profited from it. And nobody, I mean, well, people lost money because they got scammed, allegedly. But I mean, there's a lot of good examples of good shorting. So I don't agree that all shorts are inherently bad. So we're in agreement on this. However, you I don't agree with what you're saying here, as far as, well, then all shorts are inherently good, because I'm saying that there has to be like this. I said 15%, 20%. Let's go to the other extreme. Why is it legal to short over 100% of the stock? I mean, the regulators know the aggregate number of the short interest. They can easily enforce basically a ban saying, well, if it's already shorted at 100%, hey, brokerages, you're not allowed to lend the stock out.
Well, in a funny way, though, if you're a stock owner, you should almost be happy enough with that, because the higher the short interest gets, the harder it is for these guys to borrow the stock, and the more they have to pay you. So if you own stock and you lend it out, you not only get the return of the stock, but you also get the return of the borrow cost. And we'll say with GameStop, the borrow cost was over 30%. And
30%, yeah.
so you not only get the return of whatever happened with the stock plus that. And in fact, if you look at a lot of mutual funds, like we'll say the big index funds are big lenders of stock, and they're able to lend this stock as an ongoing part of their business, which then allows the regular retail investor who just has put money away for their retirement to sort of juice their returns over time. And that works fairly. There's also even another interesting thing, that it's good, in my opinion. This is maybe more controversial, but when a big index fund lends out their stock, you don't get, the one thing you don't get when you lend out the stock is the right to vote, right? It's kind of, you have to actually own the stock to vote rather than have lent it out. And to a certain extent, there's a lot of people who question whether it is good that there's so much money in indexes, because the index funds really don't necessarily put an awful lot of thought into their voting on corporate actions, in particular even CEO pay and things like that, or they sort of outsource it to consultants or whatever. But actually, when they lend stock, it means that the stock eventually is in the hands of someone who actually really likes the company, and who chose it. They're not just in it because it's in the index, and that person might vote in a more reasonable way. So there's pros and cons to everything, but it's not an evil or a terrible thing. I generally, like I said, I really do recommend that people don't short stocks that much, because it doesn't work that well. But I don't really feel there's, the regulation is in there in the borrow cost. Like when you start seeing more and more expensive borrow cost on your short positions, that on its own is often enough to get you to buy back in. Like it's actually really surprising that anyone sat there for like, actually within Melvin Capital, I'm amazed that even their sort of their risk team agreed to being short a stock that was that shorted already. But I'm sure they have their own ways of doing things.
I think one of your students is trolling you. Somebody just donated $10 saying, "Hey Patrick, where can I get solutions to your trading options book? Thanks." I think that may be one of your students.
Unfortunately, they're not available.
That was good. That was a good. I think that he or she deserves a shout out. Hold on, who's that? Max Speed 2K, a gamer. I'm assuming by the ending. 2K is a video game, or a video game company. Anyways, so a few things. First of all, I agree with you, but from a different angle. I I don't think retail investors should ever short the stock for a different reason, because you have an unlimited downside, as we just saw in the GameStop.
Yeah.
You can literally lose an infinite amount of money by shorting a stock. There's no limit to how much you can lose. And even as you just saw, even hedge funds can go down massive, multi-billion dollars. So I wouldn't advise going into a transaction when you have uncapped downside. I mean, Jesus Christ, that thing is
Yeah.
scary. As far as the second point, and
Well,
here's what I,
that's actually even a good example. Like back when the whole Nikola thing was going on, and people in the comments of my videos, people were asking, should I short Nikola? And I kind of had the same thing to say as I have to say about GameStop. Like, just
leave it
let other
alone.
people play
Yeah,
this game. This isn't actually how you generate wealth. Like, even if it works out and you get lucky, the bad thing is you'll be sucked into doing it again, and they eventually get you. So.
so, and also I agree with what you said. Like, here's why you gotta love Elon. Elon has 0% compensation correlated with the stock price, and 100% of the compensation correlated to actual performance, delivery numbers, actual manufacturing numbers, actual performance numbers. So he doesn't give a shit about the stock price. That's why he can tweet stuff like, "I think the company is overvalued." Remember when he tweeted that out a couple months ago? I mean, he's
Well,
the.
I'll tell you why I could never like Elon, and it's a very simple
Oh, you're
argument.
getting in bad
Elon
territory.
Musk is a bald man, and he's now got hair, and I just feel that if you're a bald man, you have to be a bald man, and I won't tolerate a guy who was bald in 1999 who
And
suddenly
came
has a full
back.
head of hair. It's
And
it's
came back.
unacceptable.
Well, then you don't like LeBron. LeBron also did the same thing. You went bald and back. I'm going your way right now. As you can see, this is getting worse. But
Yeah,
so this is getting worse. I'm just trying to cover it up. So Patrick,
better. It's getting better.
it's getting better.
Think of all the money you'll save on hairbrushing.
Exactly. Okay, so there's an important comment here. Somebody says, uh, okay, it was short sellers who identified Wirecard as a huge money laundromat, and they're important, I think. So somebody says about Wirecard was exactly heavily shorted as well for very similar reasons. Somebody commented in the chat, so it's kind of a negative comment, but I'm sure you can handle it. You're a big boy, Patrick. Guk Wapanzi says, Patrick Boyle is very naive. There are lots of laws and rules with regards to short selling, but there are some many bad actors without any consequences. Case in point, Tesla and all the FUD they had. Now, before you answer this, let me just preface your answer. You have to understand that Patrick is one of those extreme market forces guy. He believes the market is so efficient. The market can pretty much fix anything, and I'm not far behind. I'm not exactly all the way on your kind of end of the spectrum, but I'm really close behind you. I'm a big believer in free market, so we are in agreement here. But here you go. Here's the other, like, the market failure argument, so you can tackle that.
I guess I just feel, truthfully, that you make your bets and you see how it works out. But the other thing, Elon did have to talk his stock up for a long time, right? Because right now he's got this sort of much more stable business on his hands. 10 years ago, he had, the first little Lotusy thing he
Yeah.
had, the first, what was it called? The model
It was
or the
the
road.
Roadster. Yeah, it was the Lotus that they just
Yeah.
converted.
I mean, that was a real piece of junk, like it did not
Hey, you're
work.
feeding into the
and
Top Gear
and
narrative. They had a lawsuit about that shit. That was
and
scripted.
Top Gear won.
No, but I don't, wait, this is a difficult debate. Um, Well,
Well, no, but what I mean is
okay,
that
okay.
there's often a thing like where a startup company, I even I had this discussion earlier with someone about Robinhood, right? Because Robinhood is in truth, it's a startup, right? They're kind of doing their best. And whenever something is a startup, it's always a bit ropey. There's always things are held together with duct tape and coat hangers, and eventually you get it sorted out. And Elon has pushed through that, and obviously, he will have this hatred for anyone who points out at another company is held together in that manner, because he sort of feels, well, you have to push through that, and he's not wrong, but. I guess I just feel that markets are what they are, and people buy and sell. People put up their money, they take risk, and if you're right, you win, and if you're wrong, you lose. And sometimes even you're right, but you're too early, and it doesn't work. So,
But I mean,
but
I
who
guess the point
knows?
he was making, Patrick, is that you have to admit sometimes the market can't self-regulate in certain extreme cases, and you need regulators to help it out.
Oh no, but the regulators are there. Like if you start, publishing fraudulent information or anything like that, I mean, you will be in trouble. And the companies are very quick to point this out, and actually sometimes a bit too quick. Like Wirecard, where they had their regulator cracking down on the Financial Times, accusing them of fraud, of teaming up with short selling hedge
Yeah.
funds, and it turned out that Wirecard was just a fraud.
I
So.
remember that story. That was massive. By the way, we have a good friend of mine in the chat, Andrew Wall, a Wall Digital. So he just asked a question. He's actually a big time gamer. He's responsible for, I would say, billions of views on YouTube for a lot of his clients. Works for some of the biggest MCNs in the gaming industry. So he asked a question, and you'll understand why I brought him up. What do you both think about the mythical upcoming of the second squeeze or the real squeeze, both with GME? By the way, I like the stock. So it sounds like him, but I mean, what do you think, Patrick? Can it still be done?
Like I said, really anything can happen at this point. Like, once things eventually settle, they'll settle. But it's quite reasonable. It's sort of, after any kind of extreme market move, you've almost got a stock that's there like, a patient that's just been stabilized by a doctor, and things can go crazy again. And so, there are people who've said to me, like, should I short it now that it's down? Like, it'll continue down. And it's like, well, we've seen how high it can go. What makes you think it won't do that tomorrow? And, I really think for a lot of people, even if you do like the stock, don't bet your life on it. Like put money in this trade that you can afford to lose and not care about, because on either side, long or short, there will be losses. Because if you think about it this way, when something goes way up and way down again, like it will assume that it returns to roughly a level that is in line with the company fundamentals. When that happens, it's essentially a zero-sum game. It's not like a regular stock market investment where you're getting over time like cash flows associated with a business model. It's simply about when you got in and when you got out. And so for every winner, there's a loser, and every loser, there's a winner. And you're kind of, it's kind of like rolling dice at a casino or whatever. Like if that's what you want to do it, have a good time. But there's no big kind of investment lesson in there, other than that this is pure risk on either direction right now, long or short.
I mean, there's good arguments to be made for the technical analysis that they can squeeze again but I mean, it depends on human psychology, how long these guys can hold out, and it's pretty much the weakest link theory, right? We need NH here to explain exactly what's going to happen next, and
Well, it's always a bit of a greater fool theory with
yeah,
any kind of bubble as well. That like if you buy it at 400, you might think, well, yes, it's a silly price, but I just need to find someone who'll buy it from me at 800 and I win. And the question then just is, it's sort of like, actually CoffeeZilla a while ago had a guy on who invested in a ton of Ponzi schemes and
I saw
just
that
kept doing
video.
it.
I saw that.
And his takeaway wasn't to avoid Ponzi schemes. His takeaway was that he had to get in and out at the right time, which is kind of a bit mad, but that's.
Jordan Tavalionis says, "This is great. You love this, Patrick. It's not securities fraud. if we say we are joking, pretty sure that's the rules. I like that cynical approach. Okay, so I want your opinion. Have you had a chance to catch the Elon Musk versus Vlad interview on Clubhouse, or at least the recording?
I heard it. You played it yesterday, right?
I
On
played
your
a
channel.
small part of it, about 10 minutes. There was like
Yeah,
20
that's the
minutes.
bit I heard.
So
Yeah.
your thoughts, Patrick? And obviously you heard mine. I was very critical of Vlad.
Trying to think through what the argument was again. Sorry.
I'll refresh your memory. Pretty much Vlad was saying, well, they asked us for $3 billion in collateral all of a sudden. And we don't know how they calculated the number. And then we pretty much said, well, if you just restrict the trade on these specific stocks and we're not going to let people buy a whole lot of them, will you go down? And then they said, yes, you can put 700 in that case. Then they said, fine, that's what happened. So pretty much that was the argument. And my kind of argument, you heard it, right? I was like,
Yeah.
just close the margin. I mean, your thoughts. You're much more like
This is kind of an interesting topic, actually, and it even relates to ideas of financial stability. So credit crunch 10, 12 years ago, and regulators globally came up with this idea that an awful lot of things like futures and options have been centrally cleared for ages. And central clearing is a good thing because it's almost like an insurance policy that allows people to trade in and out, and they're never facing each other. So if I bought a future and Tom sold it, we don't have to worry about the credit risk of each other because we're each facing a clearinghouse. So there's clearinghouses. The clearinghouse for stocks has been around for ages as well. And now they've moved more and more derivatives onto these, like things like over-the-counter derivatives. They want them to be centrally cleared. Now, this sort of seems like a good idea because it's almost like the castle on the hill of defending against things going wrong in the markets, against financial collapses, this idea of clearinghouses that ensure the trades. So what's wrong with that is that the clearinghouse, how does the clearinghouse defend itself? Well, whenever things go crazy in markets, they're able to ask for more margin, right? So clearinghouse can just go to all of the brokers, or they can go to whoever is. If you're trading futures, you can just have your margins increased. If you've sold options, you can just have your margins hiked on you, and that's always been the way. But it's sort of getting more widespread. Now that doesn't seem problematic, but it tends to explode, and it always explodes at times of stress. Now, sorry. These clearinghouses are supposed to stabilize everything, but if every time the market gets stressed, the clearinghouse goes out and asks for money. I believe they asked Robinhood for 3 yards when it's a $2 billion company, right? So, you've got a day or two to come up with $3 billion. Bit of a sticky situation they found themselves in. But that's actually how clearinghouses work. And if you trade derivatives, you're used to this. Like, you're used to when the market gets a bit crazy, they just ask you for more capital because the clearinghouse has to be safe. The problem is, though, that is the clearinghouse now possibly a sort of center of instability in the market? Because if they're going to defend themselves no matter what, and their way of defending themselves is to ask the sort of shaky counterparties for more capital, that's not necessarily the most stable thing. Because they're going to look around at all the brokerages and they're going to say, well, which one is the worst capitalized? That's the one I'll ask the most money from. And that's kind of what happened with Robinhood. And there's nothing like evil going on there. But it is possibly something that that market regulators possibly need to give a little bit more thought to, because firstly, like if luckily it's kind of, this is sort of a small, a medium-sized stress in the markets, right? So Robinhood were able to actually get that money rather quickly. A lot of the time, like back during the credit crunch, if Goldman Sachs were told they had to put up 20 billion in capital in the next day, it's like gone, there's your financial system gone. And so it's kind of an interesting and a problematic thing. I guess because I come from the world of derivatives, I'm not even surprised like when I hear that someone gets asked for more collateral, because basically when something gets more volatile, and by that I just mean a wider standard deviation, or basically that the price is moving around way more than it historically did or should be expected to, that is viewed as risk. And therefore, when there is risk, they need more capital behind the risk, because that's how they defend against risk, is just by being well capitalized.
But Patrick, if they have 100% non-leveraged transactions, what kind of risk the clearinghouse faces? I mean,
The clearinghouse does face certain amounts of risk, because we'll say, for example, when stocks settle in 2 days, okay, what happens is that means that if you owned a stock and you sold it, it's 2 days until everything is settled up, but you'll maybe see the money in your brokerage account right away and buy another stock with that money, right? Now the broker is actually lending you the money to do that, because the broker doesn't get everything cleaned up for 2 days. Now there's also people who argue, well, what about blockchain? Should this stuff all be on the blockchain? And
you
I
literally
can't
just
give a good
stole my
answer
next
to
question, Patrick. Come on. Give me an opportunity to ask this shit. Go right ahead.
Well, that's a difficult thing to answer, because, of course, even without something like blockchain, in the digital age, it's sort of surprising. It used to be 3 days, now it's 2 days. But there's an awful lot of back office functions that, in truth, I don't really understand, that relate to even just trading errors and whatever, that tend to get ironed out over those 2 days. And so, in a way, that lag is actually in the system by design. Like, it's not an accident. It's not that they don't know they can wire money around quicker than that. It's actually there as sort of a fail safe.
Lebel, he's been asking really good questions, or I don't know if it's a he or she. Let's just mod that person. He's been asking fire questions. Now has the ultimate question for you, Patrick. He's asking how do you know which way to go with your investments? Whether you use mathematical analysis or an actual crystal ball.
I think a crystal ball is always the best way to go, but the problem is that witches steal them from you.
You can't go wrong with a crystal ball. So Patrick, we have a few minutes left. I want to take some questions from the audience, if that's okay with you, because we didn't let them any chance. Like, outside of the crystal ball question, I mean, so if you have any questions, guys, this is a good time. We're going to take let's say 3 questions from the audience, and then we wrap it up. You have time for 3 more?
Sounds good.
Okay, let's go. Okay, so somebody says my mouse cursor is on my hair. Sorry about that. Okay. Okay, somebody asked thoughts on Bitcoin. You already covered that, so we already touched on that. Lebel says, I'm a she, and Lebel is German for dragonfly. Thank you for letting me know. I appreciate it. Okay, so let me look for a good question. Okay, here's a question for you. GME price target from Patrick. And before you answer this, we're pretty much kidding at this point, right? Because we don't know. There's no way to really know. Obviously, this is like 90% just, kidding around. But like, if you had to, if I put a gun to your head and say, hey, Patrick, bet on the number. And I mean, it's not financial advice. It's just, playing around, playing.
I would have to look up. Off the top of my head, I don't actually know how far away the moon is. So I can't answer that.
Somebody says if you have any Bitcoin in your portfolio, Patrick.
I don't.
Lucas Fernandez says, love your videos, Patrick. Come from the wisdom, stay for the witty humor. Oh, I give you a huge compliment.
Thank you.
Somebody asked, can I ask you about theta? What is a theta?
About which?
Theta? Theta?
Theta, like the options Greek?
I think so. What does it mean?
So that's just the amount that an option, if you're long an option, it's the amount that an option falls in value as time goes by.
Okay. There's a question here about the eToro stop loss, but I don't think Patrick is the guy to ask. You heard what happened with eToro?
No, I didn't.
They were forcing stop losses on people a couple of days ago on GME, on AMC.
Wow.
for selling like a 10% loss or 15% for no reason. So that's not a Patrick question. Patrick, here's a good question for you. Jungle City Wealth says, if I want to expand my knowledge on options, any suggestions on how I can do that?
You know, I have a huge group of videos up on, it's the old videos on my website or on YouTube. There's a bunch of playlists on options, and it basically takes you from the beginning, like what is an option, up until, more complicated, how delta hedging, dynamic hedging works, and so on. It's when I first started my YouTube channel. So someone a while ago referred to them as looking like hostage videos, where I'm like, an option is, but that's how it is.
We all have those videos. If you go back to some of mine, which I haven't deleted yet, it's even worse. So this is a great question. I don't know if you heard this argument, but I keep seeing it on Reddit. People claiming there's counterfeit stocks. You heard this nonsense? How? It does not make sense to me. How can you counterfeit stocks? You heard this?
Yeah, that's not I haven't heard that. And
Somebody put up some mathematical equation basically based on the amount of shorting and the amount of stocks. There's more stocks than in existence basically being shorted. But I mean, that's possible without counterfeiting stocks. I don't understand the math behind this. You've seen this around? I've seen this argument.
I haven't seen it, no.
Yeah, go to Wall Street Bets. There's a lot of it there. But I don't see how it's, I mean, the way you issue, it has to be like a massive global conspiracy with the...
Yeah.
I don't think GameStop would be the target of that. So, chances of another squeeze being exposed, we covered that. Okay, here's a good question. Macro question from Tim Brown. He's asked, Patrick, how is the trading game going to change from now on based on what we just saw? You have to understand though that Patrick he's a futures options guy, so he's seen crazy as shit. This is nothing.
I think it will change a few things. Like I said, I think it'll change how people assess risk. In particular, like I said, just the realization that things can crash up as well as down. I think it will probably change even how prime brokers, like you might see higher margin. In fact, you might really see a big increase in margin requirement on shorts. I think people will be generally more careful. And then what happens is 10 years will pass, everyone will forget, and it'll be back to this again.
Andrew, I'm going rapid fire because I know we don't have a lot of time left. Andrew Walt, my friend, asks, of all the trading platforms, which one is the least likely to cock-block retail traders moving forward, in your opinions? I'll pick it up and then I'll let Patrick pick it up. We're both in agreement, me and Patrick, that probably this isn't a shady kind of internal attempt to cock-block traders, but rather, I would say, miscapitalization. I mean, it's probably closer to negligence than any sort of like a intentional wrongdoing. I've answered this question on my Twitter and said, hey, just get a Fidelity account, get a Schwab account, get something like a grown-up platform, and you'll never get blocked again. It's simple.
Yeah, I mean, I sort of deliberately don't, like, people often ask me who they should trade with, and I deliberately don't answer that question just because I only know who I trade with. And even when I trade with the sort of institutional end of a brokerage company. So any answer I gave you would be probably misinformed at best. I don't really know. But I do agree that, you do need to deal with a broker that's sort of well capitalized. And I think there is something questionable about sort of a phone app as a broker. I just think, there's a lot to be said for there being a big firm behind your broker, because it just means that if something goes horribly wrong, there's someone you can sue, while if something goes horribly wrong at a tiny little firm, you're out of luck.
Somebody says this guy is useless. I don't know if he's talking about me or you, maybe both of us.
Thank you. Don't forget to hit like and subscribe.
Thank you for the view. Appreciate it. I think he's talking about me or me. I don't know. Okay, so who else we have here? Okay. Some guy says this guy is very useful. There's a battle going on in the.
Oh, it's a long short sort of. We'll never know.
I'm about to die. This is crazier than I thought. Okay, so I think we're last question. So you don't want to answer. Let's not. You don't want to talk about cryptos. I mean, it's not your thing. A lot of crypto questions. Um. Okay. Here's a good question from let's play bass. I'm assuming it's a bass player. Since Robinhood and similar brokers struggled with capital, do you think they will continue to have the problem, or do they be able? Oh, okay, so there's a syntax problem here, but basically they're saying, um, obviously, I think I know the answer to this. I think Robinhood raised another billion,
Yeah.
right? But it's still not going to be as big as Schwab or Fidelity. I mean, they
No,
can.
but I guess at least they are better capitalized right now. And also, when market volatility dies down, they'll be kind of overcapitalized. So it's,
I'll leave you with one final comment. Somebody says, "I like the Patrick." It's the ultimate meme. You got it. I mean,
you know,
I like the Patrick.
I
We can
like you too.
we have to make it into a caption and use your photo with the phone. I like the Patrick. Okay, guys. So I think that's all the time we have for today. We finished our hour. It did go by very very fast. Somebody says they are double useful. I think they're referring. Nick is referring to both of us. Thank you. Appreciate it. Somebody, Luca is asking if he can call option U, like you personally. I don't think he can. There's a lot of we like the Patricks in the chat. So yeah, the memes are getting out. The memes are going crazy. Um, okay.
A while ago, I used the word mem on my channel because I've mostly just seen it written down,
Oh,
and the comment section went crazy, like, the guy doesn't know how it's pronounced.
at least you're
It's a
confident not
French
to.
word, isn't it?
I don't know where it's coming from. I mean, people who pretend not to fuck up the way they pronounce shit are pathetic. I mean, I've done it today at least a couple of hundred times. I mean, at least have some confidence to admit it. I mean, I applaud you for doing it. Okay, so guys, we can't take any more questions because we ran out of time. You know the drill. You show some love in the likes and the comments. We'll get Patrick back again if he's willing to do it. This literally went by like super fast. It's been an hour. I didn't even
Yeah.
notice it. It was a fun discussion. I think we really kind of haven't seen the last of this story yet, but not necessarily from the side of where this stock is going on, like specifics, but rather this thing isn't over yet. There's gonna be a lot of, I mean, regulatory concerns are gonna be raised. I mean,
Yeah.
there's a lot of ripple effects that are gonna go through the market, like a wave, like so. Let's see
Yeah.
where this thing lands. If you haven't subscribed yet to Patrick's channel, go Patrick Boyle Finance. Somebody asked if it's a North London accent you have there. I don't know whether
It's Irish.
it's Irish. That's what I knew. I thought it was Irish. I was like North London. Um, so yeah. So go to Patrick Boyle Finance. His Twitter is linked in the description of this video as well, so you can go and follow him on Twitter. I mean, I love Patrick, so I love the Patrick. Thank you for coming on, Patrick. A pleasure. And if
Thank
they
you for
want you back
having me
again,
on.
let's
It was
get you back
fun.
again.
Okay.
Eventually that becomes like a podcast.
Yeah.
The Russian Irish connection.
Yeah.
Thank you, Patrick.